Hi guys, good morning. Time I'd like you to click subscription button and turn on notification bell so you stay updated every time I post a video. Alright, I'd like you to quickly check in the comment section, type your name, type where you're watching me from. I'd like to know where you're watching me from. You can share this live session to your community of friends and traders you like to participate in what we're doing this morning. Do well. Okay, type your name and where you're watching me from. Let me know. Okay, my friends. Alright, so today we're going to go through a top-down analysis process for the dollar and foreign currency. Alright, so today we're going to go through a top-down analysis process for the dollar and foreign currency. Alright, so if you have been watching me for the past few days, I think about a week or so, you'd notice that I've been projecting that we're going to have the dollar retrace into this bullish order block, after which we're looking to see the dollar trade into the drawn liquidity higher. This time around it's going to be the old high right here. This is price literally, repricing into the internal range bullish order block, which is also confluencing with an area of resistance, providing new support. We have a confluence of bullish order block, fair value gap right there. Remember, the most valid order block is the one that has a fair value gap attached to it. Alright, and this is also finding support at a monthly breaker. I outlined that level in some of my videos. I think the previous videos, you should take a look at it. Then we said we'd like to see the dollar create a new expansion higher, trading to the external range high here, and also the relative equal highs residing above that old high. Also, because if you check clearly, you're going to see that there is a fair value gap residing above that old high. There's a fair value gap right there. So all these levels, this is what I'm talking about, the fair value gap right here that is residing above that. You can see this, the fair value gap here residing above the old high. That's the drawn liquidity for the dollar index, and it's important that you start doing analysis from the dollar, because the dollar is the benchmark asset for all the dollar. Give me a minute. For all the dollar and dollar associated currency, it's important that you know the direction of the dollar before you start to trade the foreign currency asset. Okay, and this morning we clearly are seeing that on the weekly time frame, remember, you determine directional bias on the weekly, on the monthly, the weekly, and the daily time frame in that order. So we see that on the weekly, the dollar is reacting of a bullish order block. On the daily, you can see clearly as well that the dollar traded into that our drawn liquidity. The buy side imbalance, sell side inefficiency, confluencing with a mitigation block by the left or bullish breaker by the left, because price took the low, created a shift of structure higher, that expansion higher. This is the bullish breaker. All right, why did I say so? If you take out the candle wicks, it's going to be more clear to you guys. If you check the candles without the wick, you would see clearly that you can see that price actually traded into the bullish breaker. You see that price formed the low, took out the low, shift of market structure bullish, we traded back into the bullish breaker right there. This is resistance turned support in confluence with a fair value gap right there. All right, so that's what we're looking at on the daily time frame. Yesterday I mentioned that we'll be looking for a setup on the 1 hour. If we see the 1 hour time frame create the pattern we're looking for, just then we'll be looking to take a buy. Unfortunately, we didn't see the dollar create that confirmation. We're looking at around these levels, remember yesterday, and I clearly mentioned that this wasn't sufficient shifts of market structure for me because I do not see momentum above the previous high. There is no momentum above that high, so I wasn't paying attention. I wasn't giving priority to this, and I insisted on seeing a 15-minute confirmation if price trades into this new week opening gap. I mentioned that I would prefer if price gets back to that level and I see a 15-minute shift on market structure bullish, then I'll be willing to go higher. We didn't see that happen. Today we see again that the dollar took out the low and created a shift of market structure bullish, which is very good this time around. All right, right at that point we're seeing that there is in gap. This gap here is a new day opening gap, and we would like to see price action trade into that gap, possibly even 50% of that gap as consequent encroachment. I'd like to see this guy trade by the dollar into the drawn liquidity higher. Where are the drawn liquidity? Of course, you can see clearly old highs. There's a gap above it. You see all of that vacuum block, the gap above the old highs here. All of this, that's draw on liquidity. All right, the old high of the weekly, the external range high right there. For me, this is going to be this week's price action. We like to see price trade into the bullish breaker, confluencing with 50% of that new week opening gap. Then we buy into the drawn liquidity higher. While we're doing this, that is the time we're going to be looking for shorts on foreign currency assets. The Euro USD, the GBP USD, NZD USD, AUD USD. That is the time I'll be looking to go short on those guys. All right, when the dollar is ready to buy. Remember, if the dollar is not ready, nothing is ready yet. Okay, this is the Euro USD chart, and we see also that the Euro USD has created a bearish breaker, took out the high, shift of market structure bearish, created a fair value gap, large range fair value gap right at the breaker. Now if we take a look at the fair value gap on Euro USD, there's a tiny fair value gap that was hidden by the left here. Institutions are deliberate about leaving this fingerprint. They're going to hide it. Okay, the impatient traders are already selling right now. They are not going to wait for price action to trade back into the levels that I outlined right here. They're not going to wait. They're going to be in this. They're already in this sell because they are trading breakout. They are seeing this level as a breakout of from a support level. So they are selling already. They are selling already. Okay, but we're going to wait until we see price action trade into the bearish breaker and specifically this fair value gap. And at the time price is doing this, we will also be looking at the dollar index to ensure that the dollar is at the point where we like to see it go higher. Then we'll be ready to sell this guy. Again, don't be confused. Most of you will want to pay attention to this tiny mitigation block here, but if you remove the candle wicks, you would see clearly that this is the most obvious you have. You see that? Took out the high. This is the bearish breaker. All right, so this is how to look at the narrative. The narrative is very important, my friends. Okay, so this is what we're looking at on the Euro USD. Drawn liquidity, of course, will be the lows there. You can see that low. There's a gap right below that. All of that. The lows right here. And also if you take a look at the relative equal lows here, these are the drawn liquidity levels for me on the Euro USD going into the week and subsequent weeks as well. All right, now take note that let's take a look at GBP USD, see if we have something similar. The GBP USD is a little bit lagging. However, we see it create a failure swing, failing to take out and shifting market structure bearish. All right, I kind of see this as smart money divergence. Why did I say so? Look at the time prices forming a failure swing on the GBP USD. Couldn't take out the high. What was the time? 16 o'clock. That's around New York Standard Time. My trading view time is set in New York Standard Times. Okay, so let's take a look at the GBP, the Euro USD, 4 o'clock. Okay. I'm trying to check for something. Okay, so the time price took out the low on the dollar was 8 o'clock, 8 a.m. New York Standard Time. Let's look at what happened on the Euro USD around 8 a.m. New York Standard Time. Price took out the high as well, which is very good correlation. Do we see it happening on GBP? Yes, it did. So there is no smart money divergence as supposed to be. All right, so we have shift of market structure bearish. Of course, I would like to still see this guy also respond to the dollar. Until the dollar is ready, nothing is ready yet. Just be patient. Be patient. Price traded into a bearish breaker by the left. You took out the high, shifting market structure bearish. We traded back into the bearish breaker and created another shifting market structure bearish. So this is a sell. We like to wait to see this guy react off the mitigation block, then we sell into the drawn liquidity levels residing below, you know, the lows here. There's a fair value gap right below that. All of those levels, we're looking at price action trading below these levels. Alright, my friends, this is my anticipation on the GBP USD. Let me take a look at gold. Let's take a look at gold. On gold, Yesterday we took a buy, and I think I showed you guys my trade yesterday, how that I took profit somewhere around here. But I was really looking at gold trading back, trading up to that level, but it didn't trade into that level. Okay. Gold didn't trade into that level. So let me show you what I'm looking at on gold. I'm actually anticipating a sell on gold today. Why? Because we see gold created shifting market structure bearish, showing us that gold wants to retrace deeper, at least into a discount institutional reference point on the daily time frame. So I'm looking at gold trading back into this bearish mitigation block right above and the bearish order block. You see this buy candle, all of these consecutive buy candles, you read them as one candle traded through by consecutive sell candles. That is also a bearish order block or mitigation block. All right, so I would like to see this guy trade back into that mitigation block. Then we sell gold. We sell gold into the drawn liquidity below. Specifically, you can see an old low there, right there with a fair value gap below. I'm looking at that level. All right, these are the things I'm looking out on gold. I would like to see gold trade into this before we sell gold into the drawn liquidity below there. Okay, so if you have any question, please quickly type in the comment section. Let me get to see, maybe a few questions I can attend to before we call it a day. Before we call it off, just type in the comment section. Let me get to see. If you have any question you want to ask me, you can do that. And my friends, you can join my free Telegram community. Like I told you guys yesterday, I'm going to start giving out free signals, so you can join the free Telegram community so you stay updated with all the free content. I'm going to be giving out free content, free signals. It's going to be coming on the free Telegram community. Okay, so you guys can do that. Join the free Telegram community. Then those of you looking to reach out to me on one-on-one mentorship, a lot of you have actually reached out, but my personal assistant told me most of you are still finding it difficult to afford the fee for the one-on-one mentorship, which is very okay. And I encourage you guys to learn on our YouTube handles for free and join the Elite Traders program. You can just check the link on the description of this video. You're going to see the link to our mentorship community that is very affordable to every trader. And guess what? These guys have access to 3 Zoom sessions every single week. Every single week you get to have Zoom sessions from me, myself, Solomon King. We are putting you through week in, week out, and you get to see what we are seeing and how we are looking at the market. And the mentorship is very affordable for everybody. For the Forex program, the synthetic indices, $50. The Nasdaq sniper strategy is very amazing. This strategy specifically, this also. And the all-in-one package we are even giving you for still a discount price, which is just $200 to have everything. And you will have access to our free signals, free Zoom sessions 3 times every single week for 1 year. Guys, nobody is doing that except the Elite Traders program. Okay, take your time, go through the website, read about us, read testimonials, see what others who have joined are saying, get to see proof of proprietary firm evaluations being scaled, being passed, and withdrawals being made using the concepts that we teach. Get to see trade testimonials, get to see withdrawal testimonials. All of these things are available. They get to receive, you see that, trading setups. This was yesterday. The gold sell, this was yesterday. This was Zoom sessions in and out 3 times every single week. It's crazy, man. It's crazy, and you're going to learn a lot from it. Then I'm going to give a 50% discount to all the guys looking to join me on one-on-one mentorship. The thing is, one-on-one mentorship is going to be very expensive. Please, if you're not even serious, don't reach out. But if you do, today you're going to have 50% discount for all the traders looking to join me on one-on-one mentorship. The one-on-one mentorship program is for those looking to fast track their trading journey as fast as possible. You are looking for a closer touch with your mentor, and you're looking for someone to hold you accountable. If you're not ready to be accountable, don't reach out to me, except you're ready for me to hold you accountable for your trading. I'm going to ask you to send me your trading history. I'm going to see what you are trading. I'm going to see how you are following, standard risk management and how you are complying to it. I'm going to see how you are complying to our trading plan. All of these things are the things that comes, as benefits to joining me on one-on-one mentorship. Okay, so all these things, if you are not ready for these things, it's not just about the money, but if you are not ready for it, please don't reach out to me, except you are ready to be accountable. Okay, my friends, so I said I want to answer some questions. So if you have questions, let me read through the comment section and see what I can answer. Let me see what I can answer. Please drop your questions. If you have questions, drop them. Let me see what I can answer. Can be more Kelvin from Mugambi, you're asking me to expound on retracement. Retracement, that's simple to do. Retracement is simply, in a market structure, remember that in a bullish market structure, for example, we want to see price action create higher highs, higher lows, higher highs, higher lows, higher highs. The higher lows are actually price action retracing into internal range to continue the trend. Alright, the retracements are usually smaller than the expansion legs, so you can see expansions will be higher, retracement are smaller, expansions higher, retracement are smaller, expansion is longer, retracements are smaller. The same thing for a sell. You're going to see lower low, lower high retracements, lower low, lower high retracements, and lower low again. So retracements are usually smaller or shorter than the expansion legs. That is what retracements represent. Usually retracement is institutions repricing into internal range to accumulate more liquidity to create the new expansion in the direction of the trend. Okay, questions. If you have questions, ask your questions if you do have questions. Okay, I think in the absence of questions, we can call it a day today. Guys, don't forget, until the dollar is ready, nothing is ready. Be patient, wait for price to get to you. You are not chasing price action, you are waiting patiently. Until next time, I wish you good luck, good trading.